Welcome back. Avenue Supermarts reported a very good set of numbers. So let's find out what some of the other players are doing in this market. V-Mart Retail came out with their Q4 business update. That showed an improvement sequentially. The Q4 same-store sales growth came in at 6% versus 4% in Q3. The company added 9 new stores in Q4, taking the total store count at 444. Now, to discuss the demand trends, we are joined by Anand Agarwal, the CFO of V-Mart Retail. Anand, thanks a lot for joining us. So your numbers are showing an improvement on a quarter-on-quarter basis. But is that just because of a favorable base, a low base, or have you seen a genuine improvement in consumer demand?
Well, I think there is definitely some improvement at the ground level. We've been saying that in the past couple of quarters as well. So last 3 to 6 months have definitely improved. So there are two factors which are working here. One is there is definitely a slight improvement in the consumer demand, in the footfalls as well. And second also is a lot of effort that we had put in over the last 1.5 years in improving our internal efficiency in terms of the designs, in terms of the product that we are putting in, and also the price proposition that we are able to provide to the customer at a more sharper price point is, I think, yielding a bit of results. It's too early to say that, whether this is going to, grow further or, how much it is going to grow. But definitely, I can definitely say that, there is some improvement at the ground level. And also some of the internal efficiencies that we've been building on have started to both results.
Okay, but despite an improvement in the ground level, you continue to see a low single-digit same-store sales growth. By when do you think you can get to double-digit?
Very difficult to predict, but all our efforts are always to maximize the growth. But I think in the midterm, I think we will still be wanting to, make sure that we at least stick to high single digits, and that's what the goal the team has taken up, and we are all gunning to make sure that we at least reach there. If we are able to surpass that, that's even better. But that's something that definitely we want to target.
Okay, all right. Hi, Mr. Agarwal. Good morning and good to see you in, and good to hear that you're seeing at least some signs of improvement. We'll take that same-store sales growth of high single digit for the coming year. I want to focus a little on margins. And the acquired unit that you did, the acquisition that you did a couple of years ago was Unlimited. Now, out there, the margins are still relatively lower in comparison to the core business. When do you see it coming up to steam with what you're doing at V-Mart?
I think we acquired Unlimited 2 years back, and the last 2 years have really been a turnaround story. We've been building a lot in terms of how we integrate the product, how we change the product, how we get to a new set of customers who are more attuned to our style of offering of value products. And all of that is now started to show some results, because we've also seen a 13% like-to-like growth in the Unlimited business in the last quarter. Now, as far as the margins are concerned, I think once we achieve sales per square feet, increment of at least 15 to 20% in the next 1 year or so, we should be able to look at more healthier margin, which are more comparable to the group margins at a much more healthier level.
I just had one follow-up. You said same-store sales growth currently at about 6%. You're expecting it to go to high single digits. But I'm just trying to understand, some of your peers, like say a V2 Retail, right? I mean, they saw growth of 40% in Q4. Both of you are literally in the same business, but you're struggling to even see a 10% growth. Why is that?
I really don't want to comment on competitors, but definitely I think what we are trying to do is to make sure that we are able to leverage all our strengths and improve our operations and, gun towards a more sustainable growth, which we can deliver quarter on quarter.
Mr. Agarwal, good morning, Prashant here. Slightly out of the box question, and forgive me if maybe I'm going off tangent, but this is an area. I mean, you've got the network, right? Especially so in the Hindi heartland states. Have you gotten sort of offers from competitors, etc.? Is there? I mean, some sort of a M&A, etc. We could perhaps look at. Is that a possibility at all, or nothing at all?
Definitely not. At least I am not privy to any such offers. And even if I had something, I would definitely not announce it on national television.
But you're saying you don't have anything, right? Nothing has come up to you.
What if someone offered you?
I think I'll take it offline then.
Okay. But you're saying that you don't have it as of now. So tell us, elections is a big time, right? In UP, Bihar, all the states where you operate in. How is demand kind of holding up ahead of polling, which is expected to start?
So right now, as I said, I think the demand is definitely looking up. We are seeing more renewed footfalls. We are seeing much better conversions. We are seeing much better offtake in all the Hindi heartland markets. In fact, these markets have been particularly been disturbed because of 2 years of bad monsoons, consecutive 2 years of bad monsoons. And this time round, we are definitely seeing a lot of interest. Now, the only challenge which I foresee in the next, at least around the time of elections, is elections usually are very disruptive, and especially in the rural areas. So whenever there are rallies or events, the towns do get disrupted, and that's a bit of a challenge. The second challenge also that I foresee is that Q1 this year unusually has very low number of marriage, auspicious marriage days. So there might be a bit of challenge at least in Q1, but otherwise at a more sustainable level, I am definitely seeing at least for the last 3 to 6 months. Footfalls firming up, demand getting better, definitely as compared to the last 2 years.
Okay. And, we were just talking about competition and how competition is doing very well. I understand that it must be a tough time for you, trying to navigate that. But anything that you are doing to sort of combat competition in terms of either pricing or penetrating the market further, and also in terms of store additions, what are we looking at in FY25?
So we opened roughly around 46 stores gross this year, and we also closed 19 non-performing stores this year. And we've been on a cleanup spree for the last 2 years at least. And I think in terms of store additions, we should be looking at around 45 to 50 gross store additions next year as well. In the current financial year FY25. There may be a bit of store closures again, maybe not more than 5 to 10, but that's what we have already planned for. In terms of the internal improvements, I think we've done a lot of work around our merchandise, a lot of work around how we supply to replenish to these stores, courtesy the new warehouse that we have set up, which is now fully operational. So there's a lot of improvement which has happened around the pricing and the value proposition that we are able to offer to the customer. And with this renewed product offering and much more fashion, because we have now also set up a full design team, which has been in the works for the last 1.5 years. So almost 40-50% of the products now that we sell at our stores is now internally designed. And that's a very, very big departure from our earlier, avatar. The second very big work that we have done is around quality improvement. So I can very safely say that amongst all our competitors and amongst all our peers, we would have the best quality at the price at which we are able to provide products to the customer. And that purely reflects in the loyalty rates that we are able to enjoy. So our loyalty rates have inched up from 60% to almost 70%. And that's the kind of sustainable growth that we are trying to build, both in terms of product offering as well as customer offering. So that's the moat that we are trying to develop on. Apart from the expansion that we have been, doing in our core areas, not really, dithering away into newer geographies, but basically getting into the cluster-based, expansion that we have always specialized in.
Okay, all right. Final question, Mr. Agarwal. Then you told us about Unlimited. What about LimeRoad? How far away is it from breaking even? Motilal Oswal has come out with a note, and they're saying from a loss of close to around 60 crores, they're expected to break even in FY25. It's on course?
So I'm not too sure whether we'll be able to break even at a full year basis, but definitely by the end of next year, we are definitely looking to break even that business, maybe in the exit quarter or so. But definitely the work that we've been doing is that we've been consecutively bringing down the losses every quarter. And that is what we will keep doing without compromising on a lot of, growth. But at the same time, at LimeRoad, the objective is not basically to build it as a top-line engine, as I said earlier as well. The objective is to make it sustainable and aid in the omnification of the overall V-Mart group. So the offline customer at V-Mart stores is able to shop seamlessly on LimeRoad, and vice versa is something that we are, trying to build.
Good to hear your thoughts, Mr. Agarwal. We appreciate you joining in. Wishing you all the best, and hopefully FY25 will be a cracker for you as well as your team.